Notable is that the US 10-year Treasury yields have been rising, even with data seemingly in favor of lower inflation. The US Treasury yields have been rising, and this could be a potential bearish catalyst for the market. But on the other hand, it would appear to be a bearish catalyst, but at the same time, when the yields are going up, that means the bonds are going down. And that, in my view, also means that the currency is losing value. And that's why the interest rate has to go higher, because the currency is less desirable. So the interest rate goes higher in order to encourage people to hold on to the currency instead of investing it elsewhere or instead of spending. Now, to me, the yields still look overall bullish. This looks like a potential big cup and handle on the weekly or the monthly time frame. It could also be a bearish head and shoulders playing out. I know a lot of people are watching out for that, but I personally believe interest rates are headed higher. And as of now, we got a low, high, higher, low, higher, high, higher, low on the monthly time frame on the US 10-year. And let's look on the weekly. On the weekly, we've been forming a bit of a support here. We were on a downtrend on the weekly, so as of now, but we did form a bit of support here, a little bit of double bottom near this previous resistance area, which seems to be holding as a support as of now. And we got a higher low and higher high in the daily. So we got to keep an eye on this as well going forward to see how this is going to impact the markets. But in my view, the rising rate, it will provide some short-term bearish opportunities because initially people react bearish to a rising rate. But ultimately, in my view, the rising rate is actually bullish for stocks because it means money is leaving the bond market, and that money has to go somewhere. And I believe it would go most likely into stocks. And also, it also means that the currency is losing value and that the currency is less desirable. And when the currency loses value, everything goes up in price, not just stocks, but groceries, this, that, oil, gold, everything goes up. Bitcoin, surprisingly, is holding up pretty well too. So overall, I believe that if the US 10-year Treasury yields keep rising, we'll get some bearish momentum in the short term, which I was seeing potential for on some of these charts. But in the overall term, I believe the rising rate is actually bullish for stocks, in my opinion.